How's it going, everyone? Welcome back to the channel. My name is Brian De La Cruz. I appreciate you stopping by. Today, we're going to go ahead and get you to understand the basics of health insurance in 15 minutes or less. Okay, this is going to be a crash course. It's going to be Health Insurance 101. So grab a pen, a paper if you want to go ahead and take some notes. It's going to be a lot of information packed into a 15-minute video. So I'm going to go ahead and cut to the chase because we don't have a lot of time. Let's go ahead and get started. All right, guys. So at the most basic level, what is health insurance? Okay. Health insurance is, at the most basic level is a contract. Okay. It's a contract between a policyholder, okay, which is John, the red man. Okay. John is going to be happy because he's getting insurance, and an insurance company. Okay. And insurance companies could be Blue Cross Blue Shield, United Healthcare, Aetna, Cigna, doesn't matter what the insurance company is. We're just talking about the basics here, okay? So John now has signed a contract binding it with a premium, okay, which means what you pay, okay? Binding it with a premium with an insurance company. So now the insurance company contractually has to go ahead and cover John's medical expenses. Okay. Now, there's a lot of intricacies between what the insurance covers for John, right? It has to be medically necessary, right? And John may have to reach a deductible. He may have to reach a max out of pocket. Okay. That's all kind of stuff that we're going to go ahead and talk about in this video. But, at the most basic level, health insurance is just a contract between a policyholder and an insurer to go ahead and have the policyholder pay a premium to the insurance company, and the insurer contractually has to pay medically necessary expenses that John incurs throughout the year. All right. So let's go ahead and learn a little bit more about what those deductibles and max out of pocket, all that kind of stuff means here in the next slide. All right, guys. So some important vocabulary that you're going to want to know when it comes to insurance. First off is your premium. Okay. Your premium, all that means is what you pay every month just so you can have access to insurance, right? Premium is going to be totally dependent on zip code, age, family size, income, if you're getting a subsidy through the marketplace, and that's pretty much it. So if you're a family of 4 or a family of 1, it's all different. We're just talking about base level vocab here, okay? Now, very important, very important. Most people understand what a premium is. A lot of people don't understand what a deductible is. Okay. A deductible is basically what you pay before the insurance actually starts to help you pay for stuff for the most part. Okay. Now, a deductible can range anywhere from $0, right? It could be $0. There's plans to the marketplace that have $0 deductibles, all the way up to 10, 12 grand. I've really never seen anything above 10 grand, but typically the max I've seen is around 10,000. Okay. Now, what this means is that if you have an accident, you need to pay your deductible before the insurance pays anything. Okay. The insurance does not pay anything just because you pay your premium, unless you have a $0 deductible, which most people don't, right? But if you have a $5,000, $6,000, $7,000 deductible, that's what you got to pay before the insurance starts to help you. Okay. Now, let's move on from that. What is a copay? A copay is a fixed amount that you pay for either a doctor visit, prescription, lab, mammogram, all these kind of things that, are not major care. You may have to pay a copay. Okay. Copays are necessary in a lot of cases, right? Because some people need to go to the doctor frequently and they can't afford to pay $500, $600 to go see a specialist every time they need to go see them. So if you have a copay that may be $50, that's going to be a huge benefit that you're going to have through your insurance, because you're going to be saving hundreds of dollars every year. Okay. That's a copay. Same thing with prescriptions. Copays are going to save you a lot of money when it comes to prescriptions, especially if you have major care needs, like if you have diabetes, if you have histories of strokes, cancers, heart attacks, where you can have medications that potentially cost you thousands of dollars. Copay is going to go ahead and save you thousands of dollars, because as long as you look for the right plan that's going to have small copays for medications, right? You may end up paying $10, $15 for a medication that would normally cost you thousands of dollars a month. All right. Next up, coinsurance. Coinsurance is the percentage of costs you share with the insurance companies after you hit your deductible. Okay. So you have an accident. Okay. You pay your deductible. Are you free and clear? No. There's coinsurance. There's different types of coinsurance. Okay. There's 90/10. Okay. There's 80/20. There's 70/30 and 60/40. My six is a little messed up, but you get the idea. Okay, these are percentages, guys. So if you have a platinum plan, if you are used to having a marketplace coverage, you'd understand this as a bronze plan, as a 60/40. Silver plan would be 70/30, gold plan would be 80/20, and then platinum would be 90/10. Okay, so you are responsible for the smaller percentage here, right? So if you have a bill of $10,000, okay, let's say you go to the emergency room and they send you a bill of $10,000. Now you pay your deductible. Let's say your deductible is $1,000. You have a super low deductible, 1,000. You pay your deductible. Now you have access to coinsurance. Okay, so if let's say you have a platinum plan, you only pay 10% of this $10,000. Okay, so your total out-of-pocket cost for something that charged you for a medical need that charged you $10,000 is actually only 2,000, right? Because you pay your $1,000 deductible and you're only responsible for 10% of the total cost after your deductible. Okay, so now you only pay 2,000 instead of 10,000, and the insurance is going to pay the rest. Okay, that would be with a 90/10 split. Now, if you had a 60/40 split, obviously your out-of-pocket cost is going to be higher, right? You pay your $1,000 deductible, and now you're responsible for 40% of this $10,000. Okay, which means that now your total out-of-pocket cost is actually $5,000. Okay, so you pay 40% of 10 plus the $1,000 deductible. Okay, I hope that's pretty easy to understand. Now, the most important part of insurance, the part that we pay insurance for, is going to be your out-of-pocket max. Okay, out-of-pocket maximum is the most that you're ever going to pay in a year before the insurance covers 100% of the cost. Okay, this is what we pay insurance for, guys. None of this really matters, right? This is what matters. Why? If you have a heart attack, stroke, cancer, those bills can rack up 500, $1 million, right? I've seen bills for cancer that can go up to $1 million. Now, if you only have to pay, 5 to 9,000, that's typically what you're going to see for a max out of pocket, right? There's some max out of pockets that are super low. There's some that are super high, especially for families. But the majority of the time, you're going to see a max out of pocket range from 5 to 9,000. Okay. So if you do have one of those major illnesses and they send you a bill of $1 million with a little, their pinky by their lip, the only thing that you're responsible for is 9,000, right? Because that's the max out of pocket of the year. So anything past the 9,000, the insurance company is responsible for. Okay, so now they have to pay 100% of anything past your max out of pocket. That's including copays, that's including, medications, anything else that has to do related to your health. You are no longer responsible. The insurance is responsible. Okay. All right, guys. So let's go ahead and move forward. We got short time here. All right. Next, very important part of insurance is going to be your networks. Okay. There's HMO, EPO, PPO. This is number two, really, as far as if we're going from worst to best. HMO's technically the worst. EPO would be second, and then third would be PPO, which is the best of the best. Okay. So HMO, health maintenance organizations, typically it's going to be a lower cost. It's going to be a little bit cheaper than the rest. Reason being is because the benefits are a little bit less. right? You have to stay in network with an HMO, so you're going to have a very small list of doctors to be able to go see in your area. You need to get referrals to go see specialists. And if you ever travel out of state, you won't get any benefits out of state. Okay. HMOs are typically going to only offer benefits in state. Next best would be PPO, right? It's kind of the middle of the road. They say that's a mix between HMO and PPO, right? But really, it's more like an HMO than a PPO. Okay. Reason being is because you still have that small list of doctors, right? You don't have access to benefits outside your state. The main difference between an HMO and an EPO is that you do not need to get referrals to go see specialists, right? So let me backtrack. What is a referral? A referral is basically, let's say I need to go see a cardiologist. A referral, I have to go to a primary care doctor first. He has to write me a referral, right? So that's a huge waste of time. And then I can go see a cardiologist. On an EPO and a PPO, I can bypass the primary care doctor and go straight to the specialist. Okay. Now, PPO is the best of the best. You have coverage all over the country, right? So you don't have to worry about if you travel to Colorado and break your leg, are you going to have the same benefits as you did in Florida? Yes, you are, because it's a PPO. Okay. You do not need to get referrals, like I said earlier, and you're going to have the largest list of doctors to go see. So let's say you have a very rare condition that you need to go to Johns Hopkins in New York, but you live in Texas, you're not going to have any issues. You can go to New York and still have, the same benefits as you had in Texas. Okay. All right, guys. So those are networks. Let's go ahead and move forward because we're running out of time. All right. Ways to get benefits, ways to get coverage. There's a few different ways. There's about 5 or 6 ways to go ahead and get health insurance in the United States. The biggest way and the most used way is employer sponsored plans. Okay. It's often going to be the best deal for a multitude of reasons. One of them being is the insurance is more than likely going to get paid by the employer, right? So you may have to pay, 10, 20, maybe up to 50% of the cost, but more than likely the insurance is going to get paid mostly by the employer. So it's going to have a very low cost to you, and you're going to have typically the best benefits available when it comes to access to medications, access to doctors, access to low deductibles, because employers want to keep their employees, so they want to offer them the best benefits. Okay. Next one would be the marketplace, right? ACA, marketplace, Obamacare, healthcare.gov, state exchanges, it all means the same stuff. It's basically where you can go to get plans guaranteed, no matter whether you have pre-existing conditions or not. Okay. The marketplace is a great fit for those who are self-employed, like I said, have pre-existing conditions, or are self-employed and lower income. Okay. Reason being is because you have access to subsidies through the marketplace, which you wouldn't have through private insurance. Okay. Next one would be Medicaid, Medicare, or TRICARE. These are basically all government-related plans. Marketplace is also government, but these are more, actually government-ran plans. Marketplace gives you access to private insurance with government assistance. Okay. Last one here would be private insurance. Private insurance is usually the best option for individuals that make over 300% of the poverty line, and are generally healthy. Okay. They're going to offer really good benefits at a very low price compared to the marketplace. Now, what is 300% of the poverty line, right? In Florida, where I'm at, it ranges from state to state, but where I'm at in Florida, the poverty line for an individual is $15,000. Okay, so if you make 300% of that, that's around 45,000. If you're making 45,000 and you're self-employed, you're definitely going to want to start looking into private options versus marketplace options, because you're more than likely going to be paying more than you should through the marketplace. All right. All right, guys. So we just made that 15-minute mark. I want to keep this, short and sweet. If you guys have any questions about anything that we went over today, go ahead and drop a comment, drop a like, definitely hit that subscribe button. I'm going to be dropping content like this. I want to do at least once a week, maybe twice a week. We'll see how it goes. But besides that, guys, I appreciate your time. If you have any questions, again, just feel free to reach out to me directly. If you need help getting health insurance, go ahead and book a time on my schedule. We'll go over your current plan, see if it's the right fit for you or if you need to switch. All right, guys. So I thank you. If you guys need anything, feel free to reach out. You guys have a blessed one.